Welcome back to Fast Market, everyone. Kevin Hinks and Nathan Peterson back for our cash tag segment. Now I'd like to bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. He's going to talk about a name coming out with earnings after the bell today. Landon, when I think of Nike, I think of brand, I think of image, and I think of association with top athletes. Give us the LikeFolio data on Nike.
Yeah, I think you got it right? They've built an entire company on brand, and it's amazing what they've done. And I think this is probably one of the best companies you could be invested in long term. Now, short term, we have a different story. They've sold off. In May, they were 127. Now we're under 90. It's been a kind of a rough ride for investors as of late, up just slightly on a year-over-year basis, but that was a pretty low price. So now, where are we headed from here? When we look at the data, let's start with web visits. So if you look at number of people going to Nike.com or its other properties, it's up 3% on a year-over-year basis. But a quarter ago, that was 12%. Up 12%. A quarter before that, it was 17%. So it's going in the wrong direction. That acceleration or deceleration, if you will, is definitely headed in the wrong direction. So we're concerned with the number of visits to Nike.com properties. And then if you look at just, how the company's doing just mention-wise, people talking about the various brands that they own on the various shoes, that's down about 23% on a year-over-year basis. And you can see, the blue line here is the number of people talking about the company's products, and the finer line, the lower one, is the stock chart. And you can see how much the stock has sold off, and it's gotten back down to about those lows from a year ago. So, we could be, getting in oversold territory, but, I'm a contrarian. I love to play that kind of thing, but I've got to have data on my side. And right now, the lines are pointing in the wrong direction. They're pointing down. I think they've overstated or overestimated demand. They've got inventory problems. The inventory is about 23% higher than 2 years ago. And you can see that. If you go to Costco, you can actually see discounted Nikes at Costco, which doesn't match up with the brand that you talked about, right? That's a Puma or a Reebok move, is to discount your shoes at Costco. But for Nike, it's a little bit, it's just disconcerting. It's a problem, I think. And then, when you look at the consumer happiness, it's not a huge break between them and their competition. But if you do look at that athletic wear competition for happiness, they're on the lower end. They're 71% compared to some of their competition at 73 or 76 if you include Lulu. But it's not huge. It's a couple points here, maybe 5 points compared to Lulu, but still, you want to be near the top here, and they're just not. So it's a little bit of a concern. I think that the bar's been lowered for investors with all the selling that's been happening. So I think that it shouldn't be a difficult thing to make their investors happy on this report, but we're not showing any signs that it's going to be a blowout, that's for sure. Maybe this is a stop the bleeding kind of report, and they can get a little bit of an oversold bounce, maybe. But my money, if I have to bet on them, is to the downside. I just think that there's just too much data that's telling me this is not yet the turning point for this company. Again, long term, love them. I'd be happy to throw some money in and close my eyes for 5 or 10 years. I think it'd be just fine. But short term on this earnings report, I'm staying away or leaning bearish.
Yeah, Landon, along those lines, if I'm an investor and I'm looking at, okay, we got a Dow component here, we got a stock that's down $35 since May, thinking, hey, maybe this is a buying opportunity given the brand strength that it does have. But then you look at the likes of, Foot Locker's report that came out that suggests weakness, Dick's Sporting Goods, suggesting weakness there. You've got the analysts that are piling on in terms of being bearish towards the company. You've got student loan repayment that's coming out, higher oil prices potentially denting the consumer. So if I'm an investor, what can I get optimistic about? Is there, are there any catalysts, or what might I look for? Could there be any bright spots that might be coming out of this earnings report that may potentially come to an oversold bounce? You mentioned the oversold nature. RSI is basically below 20 right now. But is there anything optimistic or any catalyst that perhaps a new investor might look to, get excited about?
I don't have anything great. No, I mean, everything that we look at, we look at the number of people talking on social media about the brands and products, the number of people that are going to the website, the happiness across that. It's not weak. It's just not strong. And so again, this is not like, the bottom's falling out. This company is going to be in huge trouble. It's not that kind of report. But it's just not, I don't think it's going to be, hey, we're turning it around. Look at this. Look at all the success we've had. I just don't see it because, they are, they're kind of they're focused on direct to consumer, but they're signaling that maybe they need to move back a little bit more towards wholesalers. They're sticking with Foot Locker, and Foot Locker's not doing well. Dick's isn't doing well. They still control about a 2/3 mind share, if you will, of the number of people. When you talk about athletic shoes, 2/3 of the time you're talking about Nike. It's 67%. 6 months ago, that was 73%. So everything that we track is going in the wrong direction now. Again, the web is up plus 3% year over year. That's great, but it's declining every quarter. So I just don't see this being the quarter where they pound the table and say, all right, we figured it out. Everything's turning around. I think it's just kind of like a little bit more of the same. And then it's just a question for investors. Are they oversold? Like this company's clearly not in huge trouble at this price. Are they a good value moving forward? Maybe, but I think that if I'm a long-term investor in Nike, I'm going to wait till after the report and try to pick up shares at a little bit of a discount.
Landon, your consumer happiness comparison, your chart there, it's got Lululemon as the clear leader. I can understand that. I can also understand On Holdings, right? That's a popular new brand for gym shoes. But Under Armour? Really? Under Armour? I mean, I'm a fan of Under Armour, but sometimes I think I'm the only fan of Under Armour, Landon. This stock, this company, they've been through some problems lately. So for them to grade higher than Nike, a little bit of a shocker there.
Right. And you know what? I wouldn't have expected Adidas to come in at par with Nike as well. So, and again, it's slim margins that we're talking about. We're talking about 2 percentage points. It's not huge, but it just kind of showcases that, just as you opened the show, Nike is all about that, the high quality, the brand perception, fantastic marketing. And, if they're not following through and customers don't absolutely love their products, that can be a bit of a problem, and that's going to just hit that armor over time. It's going to weaken that over time as being the number one shoe brand in the world if people just don't love them as much as they love the competition. And like On Holdings, I mean, their shoes are amazing, and as more as consumers try these other shoe brands and say, you know what, these are really comfortable, I like these better than Nike, that's going to be a problem long-term for this company. Again, 2 points. It's not the end of the world. Right. But if this trend continues and, if Nike gets in the mid-60s, then it's a real big problem. So we're going to be watching that one very closely.
Great data as always, Landon, and a fun conversation for us to have with Nike coming out with the earnings after the bell. Any problems that they may be having seems like they're discounted already in the stock because that stock from an oversold is extremely oversold from a technical basis right now. Landon Swan, co-founder of LikeFolio.com. Thank you so much for coming on as always. Have a great day, Landon.
Thank you, Kevin. Appreciate it.
All right, Nathan. So we've got Nike.